No interest rate change this time. It stays at a record low 0.25%, but the European Central Bank says it is ready to take action next month to boost the eurozone economy if inflation remains too low. President Mario Draghi stressed the ECB's independence, responding to French politicians and the International Monetary Fund who want it to do more to boost the economy and counter deflationary pressures.
It's true that the recovery is proceeding, but it's proceeding at a slow pace, and it still remains fairly modest. I would say that the Governing Council is comfortable with acting next time, but before we want to see the staff projections that will come out in the early June.
The IMF, France's Prime Minister and others have been calling for moves to curb the growing strength of the euro. As Draghi spoke, it slipped but remains near a 2.5-year high against the dollar. The ECB's experts are not likely to come up with eurozone figures that are much different from the European Commission, which just predicted 1.2% growth this year and 0.8% inflation. Inflation that low makes it harder for businesses and individuals to reduce debt, and a strong currency can reduce economic activity by making exports more expensive and imports cheaper. Very low inflation or prices actually falling, deflation, can derail a recovery as people put off buying things, anticipating that prices will fall in the future, which is what caused Japan's economy to stagnate.